Hi, my name's Adam. Welcome to the channel. Thanks for joining us today. Today we're going to talk about a really unique situation, and hopefully this never happens to you, but you need to be aware of it because if it happens to you, it can be very, very costly. Before we jump into it, if you haven't already checked out our financial planning masterclass and our membership course, make sure to check those out. There's a link below. You can find out more. If you're looking for more education beyond kind of what we're doing here on YouTube, we put together over 100 videos in our masterclass that will help kind of educate you and create financial literacy around everything financial planning, retirement savings, tax planning, mortgages, real estate, everything. So check that out below. There's a link below to learn more. So today we're going to talk about the tax-free savings account and over-contributions, but we got quite a big spin to this. So what happens is, and we've covered it in this other videos, but if you over-contribute to a tax-free savings account, any over-contribution amount is penalized at 1% per month. Okay, so that's the standard. If you put too much money in, it's penalized at 1% per month. Okay, now there's a bit of this, I like to call it a loophole, but it's actually a trap that you could fall into where you're unable to actually withdraw the excess contribution and thus having to pay that penalty for potentially many years. So let's go through that scenario and how this could happen to you and how to avoid it. So currently, if you over-contribute to a TFSA, you're able to withdraw that and avoid penalties going forward. You're also able to apply to have that tax penalty waived. And basically what that involves is saying, look, like I didn't mean to, it was an accident. And it means that you actually have to pull out your over-contribution and any income and gains that you've accrued from that over-contribution, which I get it. I know the comments are going to come below. Well, how do you calculate that? You'd have to reach out to CRA and figure that out on a case-by-case scenario. But in general, you have to take over-contributions and any income and gains on that over-contribution out and argue that it was an accident. And I think a lot of times CRA will say, yeah, no problem, we'll waive that. Now, that process is simple as far as pulling money out of your TFSA that you've over-contributed, even if you have to pull the income and gains out as well. But what happens if you have $0 in your TFSA because you bought maybe one stock that went to zero and you're unable to pull out the excess? So let me give you an example. Let's say someone's new to Canada. Okay, so in 2021, you're new to Canada and this is the first year you've been able to accrue TFSA room. So you have $6,000 in TFSA room. But let's say you misunderstood the concept and how much room you got, or you thought you could get more room from previous years. And let's say you put $18,000 into your TFSA room because you thought that that was your room, okay? And with that $18,000, you bought a stock or a high risk investment or whatever it is. Let's, for this example, say you bought one stock. Let's say that stock went to zero, okay? So you put in $18,000 even though your contribution room was only $6,000, and now the value of your TFSA is zero, okay? Well, now what happens, right? You've over-contributed $12,000. You can't take it out, right? Because there's nothing there. You can't take something out of an account when the account balance is zero. So it creates a massive issue and an ongoing tax liability until you've accrued more TFSA room and can put more money in there. So in this scenario, again, the TFSA account value is now at $0. There's a $12,000 over contribution penalized at 1% per month. And there's no way to pay it back. So if the CRA came to this person and said, look, you've over contributed $12,000 to your TFSA, you need to take it out so that you're not over contributed. Again, accounts at zero. So what would happen? Basically, if this was happening in 2021, January 2022, this individual will get an additional $6,000 of contribution room, okay? So now they've over contributed by only $6,000. Then in January 1st, 2023, again, another $6,000 contribution room. So now they've wiped out their over contribution. So even though their TFSA is still at zero in January 1st, 2023, they finally are at the point where they're technically not over contributed to a TFSA because they have a cumulative amount of $18,000 and they've technically put in $18,000, but they're gonna owe that penalty, that tax, on $12,000 for the first year and $6,000 for the second year. So, it's going to add up to a lot of penalty, a lot of extra tax and fees. And it also, it inhibits that individual from using their tax-free for the next 2 years because they're just kind of making up. So, the first deposit that person could make is on January 1st of 2024 when they get more contribution room. So again, be very aware of this. And you think this will never happen to me, but trust me, it's happened. And there's cases online. If you search it, there's a bunch of cases of this happening. It's more common for maybe younger people, right when they get their first year of contribution room, putting too much in and this happening, or later in life, someone coming to Canada, new to Canada, doesn't understand the contribution rules or is advised badly on how much contribution room they have. So be very aware of how much TFSA room and be aware of how you invest this, okay? I've always said a TFSA room is a great place to invest in higher risk. If you have the appetite for, higher risk investment, it could be a good place to put a very small piece of your TFSA in the high risk. Because again, if you buy, say, a stock at $1 and it goes to $100, that's going to be tax-free growth. So that's great. But again, the flip side is a scenario like this where you buy one stock, it goes to zero, and you potentially have to pay penalty tax for many years. So again, I know this is sounds like a bit of an extreme example, but it could happen to you too. So just be aware of your contribution room, how you're invested, what the penalty is, and a situation like this, like walk through it in your own situation. If this happened, how many years would you have to kind of accumulate more TFSA room to be able to pay back and not have to, continue to pay that tax bill? The last thing I want to say around TFSAs, and this is a bit of a side note on this video, but it's very important to start utilizing TFSA. We're talking to more and more of you that have a big pension plan, an RSP, and no TFSA savings. So it is a tool that we will utilize in clients' plans later in life, deregistering RSPs, maxing out TFSAs, that kind of thing. But if you're in a position to start saving in a TFSA earlier, start saving, because when you hit retirement, it's a great tool to pull out tax-free income, okay? When you hit retirement, if you have, RSPs and or a pension plan and other taxable income, and you want to take a $20,000 trip to Europe, or you need a new roof on your house or anything like that, a TFSA is the best way to pull out a large chunk of money in retirement, not drive up your income, your taxable income, potentially OAS clawbacks. So TFSA is very important. Now, I understand that if you're in a high tax bracket, the RSP still makes the most sense, absolutely. But maybe create a strategy, in the 10 years leading up to retirement where you put money into your RSP for the tax break, but the refund that you get, you allocate to your TFSA. So create a strategy like that where you're kind of dipping into both, where we're getting the nice tax break. Instead of taking that refund and re-putting it back into your RSP, maybe allocate a bit of that to a TFSA. Ideally, you walk into retirement with $25,000 to $50,000 at least of TFSA money, and that just creates so much more flexibility in retirement. Again, we talked to someone yesterday. They have, they did very well in the markets during COVID, but they saved up. They have, I should say, $3 million in RSP. They did very well doing DIY investing through 2020, through COVID, but now they have no TFSA and they have a lot of RSP. So it's kind of invested a bit wrong, but again, good situation to have. They still have $3 million, but we need to start deregistering that now. It's going to be at a higher tax rate, get it into their TFSA. So think about how you're planning, how you're investing, how you're saving for retirement. Because when you hit retirement, kind of the more tax efficient your accounts are structured, the more tax efficient and the lower amount of tax you're going to pay through retirement and be able to pass on to the next generation or a charity or whatever it may be. So just something to think about. If you need help on allocation of savings and that kind of stuff, we're happy to help. We do offer fee-for-service financial planning. We'll put a link below, or go to parallelwealth.com/FFS, so fee for service. And you can learn more about our fee for service stuff there. But again, create a plan around your savings that match up and kind of align with your retirement goals to make sure that you're not paying too much tax in retirement, but also saving on taxes now while you're maybe working and have a higher income earning. So there's a bit of a strategy around this, but again, just make sure you have a plan and you're not just throwing money at certain accounts because it feels good. That's the worst thing to do. So anyway, hope you enjoyed this video. Hope it gave some clarity around overcontribution on TFSA, and a bit of a trap that hasn't really been brought up ever on. I haven't seen a video on YouTube on this, but hopefully it brings some clarity to that. And again, it's not going to happen to most of you, but if it happens to you, it's an expensive price to pay. So hopefully this video will avoid that and keep you back on track. with your TFSA contribution. So thanks for joining us in this video. If you enjoy these videos, hit the thumbs up. It really does help them get out to more people. And if you're not already subscribed to the channel, which so many of you aren't, please hit the subscribe button below. We've just passed over 10,000 subscribers. We're so thankful for that. So thank you. But if you're not a subscriber, hit the button below. Costs you nothing. Take 1 second. We'll see you in the next video.